Sandeep.
Hi, Pushkar.
Hey
Hi, Arjun.
guys, so excited to finally be doing this with two close friends.
Many,
Absolutely.
many thanks, Arjun. We are so glad to finally host a superstar. So many thanks for taking our time.
And Sandeep, the ground rule is no cricket talk on this conversation.
We just had that 2 minutes before. We just had that 2 minutes before you joined, dude.
Right. Three cricket fans. Perfect. So, hello everyone. My name is Pushkar. I work for a firm called Cremis. With me, I have Sandeep, my co-host, founder of Incrementum, one of the smartest guy who lives in Bangalore. And Arjun, of course, doesn't need any introduction. But maybe Arjun, if you can just take 2 minutes to tell us about yourself.
Absolutely, I think first excited to be in this conversation with two friends. Both of you have spent a lot of time over the last few years and both share the love of cricket as well. So excited to have this conversation. My name is Arjun Vaidya. I'm currently founder of V3 Ventures. But prior to this, I ran an Ayurvedic products startup called Dr. Vaidya's, scaled it to India's largest Ayurveda brand online, and sold the business. Currently focusing on investing in my favorite space, which is e-commerce and D2C. So I run a VC fund investing in early stage consumer businesses. We have done 11 investments out of our first fund, about $30 million. Outside of this, I'm a active sportsman. I love cricket, but I don't play cricket. I play football. I run marathons. I'm a big paddle and pickle guy now. And I have more than 100 angel investments prior to starting the fund as well.
Wow. So how did you
Awesome.
get into paddle and pickle? Is it really popular in the US?
No, actually, I'm a squash guy. So the problem with squash is I've been playing for 20 years, and I'm at a reasonable level, and so it's not a social sport. You can't play with so many people. Paddle and pickle allows you to be much more social and also expands the TG to badminton players, table tennis players. So it's just a fun thing to do, and it's become a big thing now in Bombay.
Okay.
And I foresee at least pickleball becoming a big thing across India as well.
Yeah.
Sandeep is smiling because he's one of the top players in Bangalore.
I'm not. I've not tried it as yet, Arjun.
No, but
but
Sandeep is a football player. He plays
yeah, I
football
play.
really
I play
actively.
football, and I'm trying to restart my tennis game as well. But never tried pickle, never tried paddle as yet.
Wow. That's crazy. But Arjun, have you come across any paddle and pickle startups in India? Just a question, anyone
Absolutely.
building that?
I think in the paddle space, I've spent time with Paddle India, which is based out of Bangalore. A friend of mine runs Paddle Park, raised money from the promoters of JSW recently, $1 million. I'm personally invested in a startup in Bangalore called Go Rally in the pickleball space, and also invested in a Surat-based startup called Dink, which is doing pickleball in tier two, tier three cities. Interestingly, CNBC just did a feature on pickleball, where I'm also featured yesterday. It's like a 15-minute feature on the sport and its growth in India. So it's really picking up.
Wow. Awesome.
And yeah, and Pushkar, which is very surprising, is like now you got these community pickleball tournaments happening between different corporates, VCs, etc. And they're having like a Mumbai edition, a Chennai edition, a Bangalore edition, a Bombay edition, etc. So it's becoming a very, very social thing. I mean, Arjun, I think there's a lot of deals that are going to be happening on the pickleball court as well, right? It's not just deals on the pickleball front, but other deals as well.
Yeah, and I think Sandeep, it's all kinds of deals, right? I'm hearing that a lot of people are finding love and dating through these as well. So it's, but for a more serious perspective, I think last couple of months, maybe 3, 4 months, I've had founders reach out to me saying, "I see you play pickleball. Let's not meet in your office. Let's meet over a game of pickleball." So I think it's quite cool. It's what golf used to be way back when, right? That's what it's going to eventually end up becoming. And it's much more accessible because golf is a sport that has a lot of barriers to entry, right? You need a club membership, you need to play, you need to train, you need to coach. It's not something you can pick up on day one. I just put a pickleball court in our beach house in Alibag, and we had our entire family there for Diwali. And my 67-year-old aunt also played, and my 8-year-old niece also played pickleball. So it's very accessible.
Wow. And it's not a taxing sport. It's not physically demanding. Brilliant. I think we already have getting some questions. So guys, just one thing, we just try to keep it very informal, chit chat. Please feel free to ask questions. Like Sandeep will be the host. Whatever questions I'll get, will ask Arjun, and Arjun is the main guy. Over to you, Sandeep. First question from your side.
Sure. So Arjun, I think you've had an incredible track record in terms of the D2C space as a founder as well as an investor, right? I mean, the when you started up, D2C was not even a word really coined. I mean, maybe in the US it was there, but here in India it was not really there. So when you go about assessing founders who are building in D2C, what are the top things that you look at from a founder trait point of view? And there's a follow-up question. The follow-up question is obviously about the company or the business itself. What are the top three, four things that you look at?
Yeah, Sandeep, it's a great question. I'll start with founder. And I think that's about 50% of the decision making process for an investor. But even if I step outside of being an investor, just from a chance of success as well, right? I think founder needs deep passion in the problem, some right to win, right? So in Ayurveda, I had 150 years of family legacy and a lot of proprietary formulations. So right to win. And the third thing is the ability to fight through tough times, because at least in consumer products, D2C, it's not a short journey. It's 5, 7, 10 years, 15 years sometimes. So you have to have that grit and resilience to be able to be in it for the long run. So from founder perspective, these are the three things I would look at. A fourth ancillary thing that I would pick up is, see, there is lots of things you can do, lots of spaces you can get into, lots of ancillary products you can launch. Clarity of thought and vision is something, as an investor, I've seen that the best founders have clear clarity of thought or vision. I want to do this, and they can say no more. I can't say I was great at that. I made a lot of mistakes in saying yes to too many things, but clarity of vision is a fourth ancillary point, right? And so it means I'll only be on my website to start with. I won't do this marketplace. I won't launch 500 products. I won't do everything for everyone. I'll be something for someone. So I think founder perspective, these things. Second thing I'll talk about is market size, right? We represent a smaller section of India. And if I talk about India specifically, we represent a smaller section of India. And so the founder has to be able to get rid of consumer bias. Now, consumer bias may not be so relevant in B2B SaaS, deep tech, space tech, because your mother, uncle, grandfather, best friend, cousin are not customers, right? You're selling a bag of chips, or you're selling plants, or you're selling personal care products, or you're selling drinks. Everybody around you is also a customer, and so they have a lot of bias. The example I can give you guys with this is, I launched a hangover product. It became available at Noble Pharmacy, which is the biggest chemist chain in South Bombay.
Sure.
Everybody was patting me on the back saying, wow, wow, so excited, so happy for you. You have launched there. That chain of 20 stores did at maximum 1 lakh rupees a month of sales for me. At maximum. Not more than that, right? So remove the consumer bias to enter a market that's much larger than just your friends and family. It has to build a large business outcome as well, right? So market size should be available for 5, 7 times growth from my first investment. So that's the second point. And the third point is numbers, revenue, gross margin, bottom line profile, repeat rates, who is the team that's backing it. So the more standard metrics that most investors look at, that all of you will know about.
Right, right.
Yeah, yeah. So leading on, Arjun. See, I mean, we have to make very tough decisions when we are investing at a very early stage, right? So we're not investing on something which is fully baked, which could A, be the entrepreneur or the founding team, or B, the business and the reality of it to go out and become a large business. So how do you is there a mental model that you use to make bets in emerging categories? So when I mean emerging categories, it could be a blue ocean extension of an existing category or a totally new category, right? So how do you use a model to kind of say that, hey, this thing could be pretty big, or this thing will not succeed in, say, an India or a Dubai, for instance?
It's a hard question. I think there is two parts to it. One is reading data. You can read externally available data, but more anecdotal data on, hey, what's selling on Amazon? What are people searching on Flipkart? What are people demanding that's not available? Finding those gaps in the market. That's one on reading data. But there is, Sandeep, a lot of instinct and intuition, right? So why will Safari be disrupted? And why will American Tourister be disrupted by Mokobara? And what is the time that a disruption will happen? Why will Lavia and Caprese now be disrupted by Miraggio? Why will Dabur, Patanjali, Imami, Vaidyanath and Himalaya be disrupted by Dr. Vaidya's, and at what time? Why will the neighborhood slaughterhouse now need a new age version of Licious, which is more hygienic? Was that relevant 20 years ago, or is that relevant today? I think the gut and instinct comes in. Yes, there will always be a requirement for something better, but when that requirement for something better become a large business is what you have to pick up, right? So I invested in a business called Go Zero. It's a low cal zero sugar ice cream. 10 years ago, Go Zero may not have been relevant, but two things helped. One, health consciousness and the increased incidence of diabetes in our country. 20% of our country is diabetic or pre-diabetic. And the second thing is, ice cream does not necessarily have to be built through parlors now. With quick commerce and food delivery, you don't need a
Yeah.
physical location. So this company is now doing 3.5 crores a month without a single parlor. That's not possible in the days of Naturals and Giannis and those kind of Baskin Robbins and whatever we grew up with, right? So I think the instinct to assess the consumption trend with what's happening or what is being disrupted is what helps with the right decision making on categories.
Got it.
But I will say one thing, Sandeep. You have to be patient if you're doing blue ocean market. And the best example is Sula, right? The
Yeah.
Sula story just about
Yeah.
listed. I know Pushkar has talked about it as well. Worlinvest was a very early investor in Sula. It was an
Yeah,
11-year
Berlin
journey
was
for us.
DSG.
It was an 11-year journey for us where they actually built the category. And
Yeah.
for the founder, it's been a 20-year journey.
Right.
So you may think about it and you may want it to become relevant, but then sometimes it takes time as well. And if you're doing blue ocean market creation, you have to be patient because you can't timing.
Sure. Yeah.
Right.
So
One
if I go to
question.
this,
I just had one question, Sandeep.
yeah.
Arjun, like you just said, like at the start when you're evaluating founders, you look at grit. Like you said, if you want to build something like Sula, it's a long-term game, right? It's a very patient game. Now, I know there's a lot of gut involved into it, gut feel. But then how do you really assess grit when you're meeting a founder? Do you spend a lot of time with him, her?
It's a
How do
it's a hard one. It's a hard one because you don't get to spend more than 10, 15 hours with the founder before you make an investment decision, right? And so you've got to rely on two things. What is the inherent motivation of the founder to solve that problem? Like I was not giving up in Dr. Vaidya's because I was taking forward my late grandfather's legacy. And my late grandfather had a deep impact in my life. So even in the toughest times, I would say, I'm doing it for my dada. It's fine. I'll keep going. And the second thing is you gotta maybe look at their career in the past and see, have they seen tough times? Have they seen difficulty? I'll be honest, I had not seen difficulty. I was coming from a sheltered environment. My dad was an entrepreneur, did reasonably well in life. I went to a good school. I went to a Ivy League college. I had a great job in private equity after college. So if you invested in me on day zero of Dr. Vaidya's, you would get a very raw entrepreneur. Because it took 2.5 years for me to realize what was going on and accept failure.
Right.
Yeah, but I know for one thing, Pushkar, that Arjun does find time for a lot of founders. I mean, I
Right.
know his meeting schedules and I know him flying around all the. So there's genuine founder empathy that comes out from Arjun, and
It
it's
comes
it's, it's
from
not
something,
something. It's
Sandeep.
natural, right? Because
It
it's
comes
part
from
of his
something.
journey.
No, it comes from something. It comes from a very disappointing meeting I had in 2018. Friend of my dad living in our sort of close to our complex. My dad scheduled a meeting with him on a Sunday. I was really struggling with my business. I thought he'll really help me. He had the tools to help me. We had a 1 hour meeting. He entered the meeting late and said, I'm only here for 15 minutes. And in the 15 minutes, he said, hey, I hear what you're saying, but I can't do anything. I can't help you. And then just left the meeting abruptly, right? At the end of that meeting, I told my dad, whether I make it or not, if I make it, I'm never going to be him. Never going to be him. Because I felt really bad, right? Like I was going through, clearly I was not doing well. And he knew I was not doing well.
So how did you kept yourself motivated? Because D2C, like most times things aren't going well, right? It's not an easy category to crack. So how did you said, hey, I have to continue?
I'll tell you, Pushkar, I think the deep sense of motivation for me was every time things were tough,
Hmm,
my dada's chair was beside my. I never sat on my dada's chair, but I kept his chair that used to sit in his clinic in beside me with his name on the chair.
okay.
And I used to keep my office bag on that chair every day to make it feel like he was there. In the toughest times, I would look at that chair and be like, look, it's not so hard. It's not as bad as I'm making it feel or seem.
Wow, yeah, that's amazing.
Well, actually, that segues into a different interesting point, Arjun. So sometimes you really feel that entrepreneurs actually push themselves too hard. When they're supposed to solve a problem, they probably think that there are 10 mountains that they need to scale, when they're probably better off trying to A, separate their emotions from the business problem at hand and then try to break that problem to solve the problem, right? Sometimes we kind of run into too much of our own emotions, and then the problem becomes a lot larger than it actually is.
Yeah, it's very hard because you're deeply invested. You're giving all your time to something. And I remember a specific instance, right? It's like month 6, 8 of my business. Fortunately, unfortunately, I was running a factory at age 25. Not easy to be running a manufacturing facility with 20, 30 people there. And my first batch of cough syrup came, and it came with the wrong price labeled on it. It was like 500 bottles from my own factory. I just went hysterical. I said, how could they do it? I put a process. The price is 80 rupees. They stamped 100 rupees, blah, blah, blah. But just going, if this reaches a customer, what happens? And I called my dad and I said, this is what I can't manage. How do I run a factory? My dad said, what happened? I said, it came labeled 100 rupees of 80 rupees. He said, so it's a mistake. What do you do now? I said, I don't know what I'll do. I'll have to waste the whole batch. He said, no. You send it back to the factory. You make a report of what they did wrong. You change the label and make them relabel it and print the right price. And that's all. You move on.
Mm.
Then you can
Mm.
solve the problem later. But today, what's the point of freaking out? Customers
Yeah.
want that cough syrup, and if you don't move, you're stuck. And when I had that instance, I realized what he was trying to tell me was keep asking yourself what's the worst that can happen. When you
Mm.
ask yourself what's the worst that can happen, it's not as bad as you're building it up in your head.
Mm. Absolutely. I keep telling myself that day in and day out, Arjun. But no, so I've got a different question. See, when you were building Dr. Vaidya's, it was a different time considering how fast things are evolving, right? I mean, your website, Amazon, all of that. Today, founders are a little bit under the pump because cost of advertising has really gone through the roof. There's so many different products in every category that you can imagine on. Influencers, whether they have real influence or not, are charging an arm and a leg. So, what is that one or two nuggets of wisdom that you can give to a D2C founder who's building today in India with the aspiration of probably going cross border eventually?
There's only one nugget I can give. Look, in my time, there were less customers and less brands. And so, if you did a reasonable job, you became the go to brand, but you could reach a certain scale after which the market would tap out. Now, you have a much larger market, but a much larger competitive set. And so, standing out from the competitive set is the crucial advice that I would give anyone. Figure out a way to stand out from the competition set. Now, unfortunately, I spoke to a brand recently, and they said our videos are going viral on Instagram. So sure, show me your videos. It's a home and kitchen brand. They had very unique products, high utility products. All the viral videos were collabs with other influencers.
Mm-hmm.
So I said, your videos are going viral, but not because of you, because of somebody else. And
Sure.
that influencer is collabing with you for one video. So you're borrowing their audience for that one video. The next video doesn't have their audience.
Mm.
And so maybe 1% of their audience follows you, or 0.5, or it's usually like 0.3 or something like that, that comes and follows you. The rest forget you after that one video and go to the next video. And so building your own organic content funnel that's yours as opposed to lending it through someone else. You get a brand ambassador, you're lending them for 1 year, 2 years. They're gone after that, right? They're not
Right,
with you
right.
forever. So building your own organic content funnel to differentiate yourself is definitely what I would say.
And what you were mentioning, end of the day, your brand needs to stand for something end to end, be it design, customer support, the writing on the package, all of that, right? It all needs to tie in very neatly and nicely.
Correct.
I
Great.
was just wondering, Arjun. So the smartest founders you meet, like because you meet so many founders, are they excellent brand guys? Like, are they very smart with building brands?
Uh, I think the smartest founders that I meet
Hmm.
have one founder being on the front end and one founder being on the back end. Because let's not discount that operational efficiency, supply chain knowledge,
Hmm.
performance marketing efficiency, financial efficiency is also crucial. So usually
Right,
two
right.
founders, one who brings the front end, the other who brings the back end.
So do you guys invest in solo founders, or do you think it's very
We
difficult to
do,
build up?
we do. I have actually invested in three solo founders. You need two things. One, you need the solo founder to accept that they're not the best at everything. And then instead of one co-founder, maybe build a layer of three middle management that solves those problems for them. But solo founders is really hard. We've invested in some that are absolute beasts. I can't imagine doing a startup on my own. My wife is just about to do it, so we'll see. But solo founders are beasts, absolute beasts. It's really hard.
Yeah, I think they have need to have insane clarity of thought, have
Time
all the
management
qualities that you talked
skills,
about.
firefighting skills.
Yeah.
It's not easy. It's not easy.
And I
Yeah.
think I find it so difficult. Like, how do you always keep yourself motivated if you're the only guy, right?
Correct.
Because if there are two, three
If you,
founders, if things are not going
especially if
well,
you're down, like, and the
right,
other person motivates you, right? So
Sure.
right, exactly. Yeah. So it's a big challenge.
So Arjun, what do you see the landscape panning out over the next 5, 10 years? Because I know we've got like a zillion funds right now in the market, maybe
sure.
400 to 1,000 funds.
Yeah.
But we're still talking about consumer, and people who look at consumer as still being a very minuscule part of it, right? Because deep tech, SaaS, enterprise is kind of dominating it. But how do you see that landscape changing, which will obviously encourage a lot more people to start up in D2C?
So Sandeep, that is changing. All the tech guys are looking at consumer now because our P&Ls are looking good. So you'll see lots more investment interest in consumer.
Hmm.
How do I see the landscape changing? I would say there will be a lot more money coming in, both global and Indian, because that 100 crore benchmark is being shattered by lots of brands. And after that, it becomes very interesting for even later stage investors to look. I think from a brand perspective, you'll see much more niche brands being built. Like, I love to give this example. How many chopping boards are sold on e-commerce every day in India? Take a guess.
Few
10,000?
hundred thousands?
40,000 chopping boards a day,
Hmm.
12 lakh chopping boards a month, average selling
Wow.
price of 300 rupees, 36 crores of chopping boards every month, for
Wow.
30 crores of chopping boards online every year in India.
We eat a
So
lot of
micro,
vegetables.
yeah, so micro niches will develop.
Hmm.
Quicker delivery and quicker fulfillment, better customer experience will be a theme. Uh, I see lots of opportunity in categories which don't have enough brands: home and kitchen, health and wellness, sports, nutrition, pets, maybe. And then India to global will be a story that will happen in the next decade. We've not had enough yet.
Hmm.
It'll happen in the next decade, especially in yoga, Ayurveda, spices, tea.
And don't you see that at some point in time, we will see a lot more shift towards classical pure D2C in India, unlike the marketplace driven model that we have right now? Because in the
No,
US,
today's
you experience
Sandeep,
that, right?
I think today, whatever makes the PNL look good. Some brands
Hmm.
will be pure D2C, some brands will be pure marketplace, whatever makes the PNL look good.
Interesting.
There was a time 2 or 3 years ago where I said, hey, like focus on D2C, the quality of revenue is better, you have data, etc., all of that. If the cash is double on D2C and you're losing money per order, does it make sense? It doesn't make sense.
Right, of course. I think there's a related question to what you just said, quick com and D2C. I think Rahul just wants to know that, say, once you're starting out, like, is there a ideal split between quick com, QCom, general trade, modern trade, or it just depends from brand to brand?
Yeah, look, I think Pushkar, it's a great question by Rahul. Obviously, I know what Rahul does as well. Um, Initially, when you start up, you've got to give two channels a try. Two of the channels that you think you have the highest chance of success, give both of them a try.
Mm,
And then from that, see which channel gives you better economics and better scale. And then double down on that channel and then enter channels in that sort of order, right? So best, second best, third best. Doing all five together doesn't make any sense. CM2, CM3 at the early stage, I won't be able to give a number because it's very different for every brand. But entry of channel, if I was a D2C brand, let's say, I would start on my website, I would start on one, two, three of the most relevant marketplaces, track data for 3 to 6 months, see what my ROAS is, what my velocity of sale is, what my number of customers is, and then that data will tell me. The great thing about e-commerce is that data will tell you what to do from there.
right, right. A very powerful insight. I agree.
Pushkar, you want to pick up a few more questions? I have a question that I want to ask Arjun in terms of exit, which I think both of us did discuss, but yeah.
Maybe we can keep it for the last because
Yeah.
we were just talking about. So I had two questions, Arjun. They are both somewhat related, and a lot of founders would relate to it. Number one is, let's say I'm a founder, I have raised a seed round. Now, half a mil, something in that range. I don't have a lot of money. Now, what are two, three marketing levers I should focus on? And how does that change once I've raised a series A or 4, 5 mil? How does it change? Like, as investors or as founder, what would you advise them? Seed versus series A.
So sorry, just repeat the question. Should you raise or not is the question?
No, no, no. What if I have raised a seed? Like, what
Okay.
are two, three marketing levers I should focus on?
See, if
And
you've not raised a seed, then you can't do um, general brand marketing. You have to be
mhm,
focused only on performance ROI generating. You can build brand through content, influencers, your own content, video shoots, etc., which will yield results in the long term. The second thing
mhm,
I would say is if you have raised a seed, beef up your team. Beef up your team. If you're a
okay,
bootstrap company, again, you're very scared to beef up your team, hire resources, etc. I can tell you, we didn't hire a mid management until 2019 till we raised our Series A. We didn't do a seed round. So
okay.
we raised our Series A. But that was a big learning for us. We didn't have a team until 2019. Once we had a team, things started moving, seriously moving.
And then what do you do once you raise a series A? Do you start spending a lot on marketing or do you still focus on team?
I think it's the same philosophy.
Hmm.
The PNL needs to be controlled. You can take a little bit more risks when you do Series A. You can enter more markets. You can run a few more experiments. But
Yeah.
fundamentally, the company doesn't change.
Okay.
Just gives you some more leverage for experiments
It's like
and hiring.
seed, you're in a village. Series A, you're in a town. Series B, C, you're in a city. And then later you're in a mega city, right? So it's just different environments with the same goal as such.
Do we take one more question? Because I found this an interesting question for you, Arjun, as an
So
investor. Like, how do you look at niche brands?
yeah, I found it very difficult to be interested in niche brands in the
Hmm.
past because the market wouldn't scale. But the chopping board example I gave, um, there is a caffeine-based cosmetics brand called M Caffeine doing 200
Right,
crores
right.
plus.
Yeah, M Cafe
Mhm.
is doing really well.
Scale. I think that's a niche brand, right? There is a active skincare brand called Minimalist doing 400 crores.
Yeah.
There's a Jeera soda brand called Lahori Jeera doing 400 crores. So I
Wow.
think India is changing in that now niches are, as the customer is evolving, niches are being able to create scale. Right? There's a brand called DU that must be doing 50 crore now. It's a skincare brand that sells products at 3,000 plus, 3,000 rupees plus Indian audience buying. Profitable
Wow.
company, right? So there's a change in the way our consumers are consuming. And today I believe niche brands are scalable.
So how
Wasn't
much
the
is
case a
their
few years
revenue?
ago.
The example you gave, $3,000 skincare brand.
50 crores.
Wow.
Pushkar,
Mhm.
I have a reverse question, Arjun. So you talked about Pushkar talked about pre-seed, seed, pre-Series A, I mean Series A, right? Um,
Hmm.
Today, do you notice that the Lulus of the world, the D-Marts of the world, are more receptive to placing brands straight away rather than they becoming a Bombay shaving company before you put them on shelf because customers are already asking for them or there's brand awareness. So 5 years back, 7 years back, it would be a challenge, right? To go to a D-Mart
See,
or a
see, Sandeep, but if you're a seed stage guy who has 10 lakhs a month of sales, still DMart is not going to accept you. Unless you are
Okay.
some person who has worked in a big company or is known to DMart before. It's very unrealistic for a completely unknown brand to enter DMart. Um, if you look at quick commerce today, the behavior will soon be like this. You will not see unknown brands entering quick commerce. They'll say you prove your chops outside here, then you come in here. Because by the way, our dark store can only keep 10,000 SKUs.
yeah, they're going to
Right.
have become like walled gardens. They're going to be super selective.
And they're going to start charging listing fees. They're going to start. I mean, I don't blame them, right? Because everybody wants to get in there. I can tell you, I would be a multi-millionaire if I got paid for every time I got asked for a quick commerce listing, right? Or if I got paid to see every time I got asked help, because everybody wants to get on quick commerce, right? So I think DMart, Lulu, Spencer's, Nature's Basket, Reliance, these are all modern trade. Quick
Hmm.
commerce will behave like modern trade going forward, and they will not take everyone, and that's okay. It's not a pure marketplace like Amazon is. On Amazon today, if your product is legal, most likely you'll get listed. Will you get sales? I don't know, but listed to ho jayega. That's not the case in modern trade or quick commerce where the shelf space is limited. And shelf space in quick commerce is availability of warehousing space in the dark store.
Right. Right.
Wow. So channel prioritization and putting resources at the right stage of the
At the right
company,
time, entering the
at the
channel
right
at the right
time and
time. Look,
stage
the
is
other
going to
thing
be
is Sandeep.
super critical.
The other thing is Sandeep. If you enter DMart or you enter Zepto at the wrong time and you get no
Hmm.
sales, they'll kick you out. They'll never bring you back in.
Okay.
Crucial point to think about.
Yeah.
Everybody wants to get in, but you think your product will sell. If it doesn't sell, don't go.
So say when someone is starting out, you advise website and then e-com.
A few marketplaces.
Hmm. And then try modern trade or quick com.
Yeah.
Makes sense.
Pushkar, there's
Well,
an interesting question
which
from
one?
Himanshu, right? What is the biggest mistake that D2C founders are making these days?
Arjun?
Arjun, what is the biggest mistake that D2C founders are making these days?
Tough one, huh? A lot of
And biggest
mistakes.
Top
mistakes.
three biggest mistakes.
Yeah. Uh, Going only for performance marketing
Hmm.
without investing in brand. Um, Having poor unit economics and keeping on scaling, thinking at some point it will just figure itself out. And picking really, really small market categories. See, niche brands still have enough market size. Maybe a smaller market size, but enough market size. But picking really elite, nuanced New York, LA, London, San Francisco, Dubai problems and trying to build those businesses in India. I think India is still a different market.
Right, right. I think Sandeep and I were also talking about it. Like it's not very easy to build a very premium brand in India. Not yet, maybe in some years, but we are still not a very rich country.
They've been flag bearers in that space, but we have not seen it become mainstream as yet, right?
Hmm.
Over the next 3 5 years, I think there'll be a lot more people trying to build premium and luxury brands out of India.
Somehow we have done well in single malts. That's one
Yeah.
category I am seeing, that there are premium single malt brand in India that are selling really well.
But Pushkar, I think we have done very well. Indri, Amrut,
Right.
very
Yeah.
good quality products. But we are not standing in the Hibiki, Yamazaki. I'm leaving the Scottish ones out, right?
Yeah.
But we are
Yeah.
not still in that. Go to Bangkok.
Yeah.
We're still not there with Indri being demanded.
Right, right,
In
right.
the
Yeah.
circles of connoisseurs, the quality of product is being accepted, but it's still not a global brand yet. I
Yeah.
think we have some way to
Mm.
go.
Yeah, yeah, long way to go, I think.
Although
Yeah,
I'm
I
very
mean,
proud,
this,
right? I'm
yeah,
very
I
proud of
mean,
it. I'm
yeah,
very
we are
proud
all
of it.
proud of it. I mean, Arjun, think about it this way. Bira took a long time before they were abroad in at least all the Desi speaking cities in the world. So in the next maybe 3, 5 years, we will probably see an Indri or a Paul John and all of these
No,
guys
and,
in,
and, and, and that's what I said, right? In the next decade is India to global.
yeah.
That's the next decade.
Right. Because I remember in Mauritius, they had launched Stranger and Sons. They didn't do well somehow. Very tough. And it's a big gin
And
country,
I
like
think
they
I
like
think
gin.
Pushkar, there is also a lot of changes outside of the brands that have to happen, right? India is now asserting itself in the global political sphere. India is
Hmm.
now being assertive about communication.
Right, right.
India is becoming a manufacturing hub for folks like Apple. So our position in the global dynamic is also changing, and that will help us.
Right, right.
We are
Yeah, yeah.
proud to be Indian, right? We are proud to wear this band on our hand, which we weren't so much. Like we were not outwardly saying yes, we are Indian and yes, we are proud. So I think it'll happen.
Yeah, finally we are becoming cooler.
Yeah, we get closer, and we can reach any of our embassies. We can tweet to any of our embassies when we travel. We get support. All of that is very heartening to know, right?
Correct. Correct.
Right, right, right. We have a lot of questions, but Sandeep, I have two questions because I think we discussed it and a lot of founders would be interested in it. Actually, one question, Arjun. A lot of people are always confused about valuation because see, maybe once you have a $1 million ARR, like 100K, 150, 120K a month, you can do a rev multiple. You can do a revenue multiple for valuation. But early stages, not pre-revenue, but 10, 20 grand MRR. How do you value startups? Like what are three, four things you look at?
I think I told you what I look at, right? Founder, TAM, and numbers
Hmm.
or early traction. Look, before you're doing 30, 40 lakhs a month in sales,
Hmm.
it's an art. It's an arbitrary number on potential. After that, you can start applying some science. And as
Right,
the
right,
number crosses 1 crore, 1.5 crore, then it becomes more science, less art. Or 2 crore,
right,
3 crore, then it becomes more science. So it's a spectrum. But at the early stage, sometimes you're just taking bet on potential of founders, their idea, their ability to execute, etc. Put an arbitrary number, 20 crore, 25 crore, 15 crore, whatever that number is, you start.
So how do you say like versus 15 versus 30? Because for founder, that's a big difference. Like you give someone 15 and someone 30.
So I think it's the two people in the room who want to do that deal, the
Hmm.
founder and the investor. You come up with, you can say you're coming up with logic, but it's pretty much just saying, I want this amount of money for this dilution to start.
Yeah.
Got
There's
it,
no
got it.
logic.
So
There's no
somewhere
logic.
you arrive at a midway point.
Right,
So what is the
right,
difference between 15 and 18 when a company has no revenue? Or
right,
18 and
right,
21? Or 21 and 24? Right?
right. But are you seeing a lot of unpriced round in early stages in India now in D2C?
Not as much. Not as much.
Okay.
If you're a really, 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 really celebrated founder and you know you're going to do a VC round and you want to bring some friends and family on earlier at a discount, you can. But I don't like that. No, I don't like that structure because it doesn't value the investors who are putting in money today. You're saying it's unpriced. When someone comes and prices it, then it's okay. Until
Right.
then, you don't know what you've invested in, right? You're just giving debt. I don't think it's. I don't like it so much.
Okay. We have a lot of questions. I'll just go through some questions, Sandeep, maybe.
Yeah,
You
sure.
you can ask one or two in between. I'm just seeing interesting questions.
Some of them Arjun has already answered.
Right, right. Maybe one question, Arjun, because this is something Sandeep and I also discussed, that as a founder, when you were building Dr. Vaidya's, did you did you know about your exit, like how you're going to make an exit, or you just said, I'm building it, let's see what happens?
Yeah, the best way to exit is to not think about it at all. You build a good business, you'll get various options along the way. Maybe exit is one of them. Uh, but if you build a business for exit and you don't get the exit, you're in deep trouble, right? So no, I didn't think of exiting it at all. And
So
I think
how
too many
should
people are talking about exits too early.
Right. Because I always see it in Series A or pre-Series A deck, like people talking about exit. But say if I'm a founder and some investor asks this question, what's a good way to answer it?
You can give options, right?
Hmm.
You can say that, hey, I'll bring the business to this scale. At this scale, these are the kind of people I'll be interested, or I'll IPO, or I'll do a strategic sale, or private equity would be interested. You can give options, but in your heart, you should know that you're building it for the long term, because those options may not pan out, play out. There's a lot of
Right.
macro factors, cash availability for the acquirer, etc. All of that. A lot of things have to play out for it to happen.
Very true. And aren't these very generic options saying I'll do an IPO or strategic sale or
At an early stage, what else will you say, Pushkar?
right? I just think this question doesn't make sense, but somehow, like if you're
Actually,
investing in
for me, now that I'm an investor, it's the investor's problem to figure that out. The founders just got to keep building, right?
right,
Like if
right,
I'm doing 50 lakhs a month, what will happen at a 50 crore a month scale? I don't know today, right?
right.
Got to go to 100 times to get there.
Right. It's a very long
So
journey.
Arjun, what you're basically saying is that has the founder thought through what will happen in potential scenarios in the future? That's about it, right? You don't need to have anything hard and
I don't
fast.
even think it's relevant, Sandeep, to be honest. At the very early stage. Yes, at a series B stage, you may have to start thinking about these. But at a series B stage, you're doing 100 crore sales, 150 crore sales. At 4 crore, 5 crore, 8 crore ARR, should you really be thinking of what happens at 20 times, 30 times, 50 times your scale? Your company will change, your product will change, your strategy will change, your markets will change. How can you predict all those things? The best fiction stories are written on Excel.
Yeah, we're always
But
talking about
that's the key takeaway. I'm going to keep that.
you can build a Google on Excel, like a Google or a Facebook.
Yeah,
Right,
now we have AI on it as well, right? So the stories can be made a lot faster in different versions. Um,
right. I think there is one more question. Like it's quite interesting. How can quick commerce reshape the B2C landscape?
It's already reshaped the B2C landscape, honestly. I think the second part of the question is more interesting for me. What are the implications? It means your website can't take 5 days to deliver to a metro city. It means Amazon will have to quicken their pace of even e-commerce deliveries. It means
Right.
same day, next day delivery in metros becomes even more relevant. It means customers will now search quick commerce options and pay. I see myself paying 10%. I'll buy a product with no discount because I get it in 15 minutes versus a discount if I get it in 3 days. So that behavior change is something all of us have to be cognizant of. I, my wife is starting a new company. She was feeling a bit anxious, as any new age entrepreneur is, about some big thing that was happening as she was starting a company. I was sitting at breakfast with her, and she went into the room, and I said, "What can I get her to make her feel better?" I went on Swiggy Instamart. I saw a jade plant from Ogao. A jade is a good for good luck.
yeah,
In 15 minutes, the jade plant was with her. I gave her the jade plant, and I said, "Good luck." At INR 249, I got a jade plant in 15 minutes.
I got a lot of money plans at home through Zepto. Hopefully, 2025 should be good.
But I think the point I'm trying to make, right?
Yeah.
Behavior change, massive behavior
Right,
change.
right. And I think Sandeep also had one question, like we were talking before the podcast, that how do I identify new categories, like upcoming categories that can disrupt the market? Something maybe that's big in the US but still not big in India.
I think that's the wrong way to look at it. Big in the US,
Mhm.
not big in India, because our consumption is very different. Think about it.
Mhm.
Ola and Uber never ever had cash option.
Yeah.
Never ever had pre-schedule your ride option. India is the only country where you have to call the Uber guy and say, "Yeah, I'm standing here, this part of the building, this thing," right? So we have nuances of the market, and so India relevant, India specific use case. And I keep talking about this, right? Pushkar, you'll see on my writings on LinkedIn as well.
Right, right.
Indianization, the aloo tikki burger of everything, right?
Mhm.
Um, Picking categories is, as I said earlier, a mix of reading consumer trends and instinct.
Mm. So, do you advise your founders to talk to as many consumers as possible? Like
But
always keep.
outside your social circle,
Okay.
it's very easy to get biased by what your friends and
Yeah.
family are saying.
Mm.
I do that with B2B SaaS or enterprise founders as well, saying that you might know 10 people or 15 people who probably have this problem, but can you stretch yourself to go to 20, 30 other people that you don't know and talk about it? And then you get a validation.
Correct.
Right, right. No, I agree. And usually it's so much easier to talk people in your social circle, right? Your friends, your family, people you know. And people always do the easier things. Like you said, it's very difficult to talk to people, maybe whom you're building it for,
Correct.
who are not your
Correct.
friends.
Correct. Correct.
It
Correct.
takes a
Correct.
lot more effort. Right. One question, Arjun, because I often see it, and of course, I also talk a lot about it because I personally believe in it that good founders are also great storytellers because story is a good way to motivate people, inspire people. As a founder, you're always selling to your employees, to your customers, to your investors, to yourself. So, as an investor, do you think, like for you, your personal opinion, do you think story is important? Do you even pay?
Story is definitely important. You've always got to be selling, whoever you are, but there
Mhm,
has to be meat to the story. It can't just be a story with nothing backing it. So I think
mhm.
there is a balance between story and substance. If you have substance, tell the story well. If you don't have substance, there's no story to tell.
Hmm.
Right, right. Yeah, of course.
I think Shan also Pushka has a very interesting question. So yeah, this question is there third party 10 to 30-minute delivery teams that we can tie up with
Yeah,
for individual websites?
absolutely,
I think it's
absolutely.
relevant for Kirana
Yeah,
stores, it's relevant for websites, it's relevant for other people as well, right?
yeah. So you can look at Zippy, ZIPP. I'm an investor there. You can look at Blitz. Again, I'm an investor there. There is Pick and Dell, I think, which also does something similar. So a lot of companies like this that are doing this third-party service.
Yeah. So all of a sudden, the logistics infrastructure that we have built up in India over the
It's
last 10
changing.
years is kind of getting adapted to the whole quick commerce wave as well, right? So
Correct.
anybody who's selling anything online as well as offline, and then you have now ONDC can ride on the infrastructure that's already been built up.
Correct.
Right. But do you think quick commerce will eventually become bigger than e-commerce, like traditional e-commerce?
Can't say. Can't say because there is a still a question on profitability of the model. You can still buy a bottle of water for 20, 30, 40 rupees, whatever that price is, and get it delivered in 15 minutes. So I think definitely consumer adoption, but long-term profitability of the model is still in question. But it will be big. How big I can't say. It surprised me already.
Right, right, right. All of us. So, what categories do you think work best on quick commerce right now? Like, say, if I'm building,
I think it's given food and beverage brands a new lease of life
okay,
because e-commerce low AOV products didn't work out. Anything that's essential or impulse based.
mm-hmm.
So you see brands now interestingly remodeling their product offering to become relevant for quick commerce as well.
Right, right.
Like more impulse, lower AOV, smaller units that
Mm.
need to be used quicker. I think all of that.
And especially, I think on the brands where people are not always looking for a discount.
Correct.
Because
Correct.
one case study I have for quick commerce, I never really believed in it. But then one of my friends in Bombay said, like, whenever you're buying groceries, you never pay any attention to MRP. You don't know whether like something is 20 bucks a kilo or 30 bucks a kilo. So a category like that works really well in quick commerce.
Correct.
Something that you something that takes away the need of dinner planning or lunch
Correct.
planning.
Absolutely.
But Pushkar, let me tell you also something. After you spent a lot of money on onions and cabbages and tomatoes, once you go to a Star Bazaar and start
Mhm.
comparing it, which consumers will do,
And that's the
because
dichotomy. That's the dichotomy we live in, right?
yeah, yeah. So over a period of time, certain people will kind of drop off the race, thinking that hey, it's easy for me to actually procure it for a week in one shot. These guys
Okay.
are already there, and some guys will be like stuck to the convenience fact factor, right? So I
But
think it's
is
going to
there
be
a
interesting.
big difference in price between Star Bazaar and Quickcom?
There's
There
huge
is. There is.
in certain categories. It could be like quick commerce is selling something, especially vegetables or fruits. The price For Star Bazaar, at 1 kilo would be the cost of quick commerce for half a kilo.
Wow,
It could be
2x.
that big. It could be that big, right?
But it's different parts of your life, right? Planned purchase, go to Star Bazaar.
Yeah,
Impulse purchase, go to. So I think people will develop what they want on which platform as well.
yeah, yeah. It's like how we used to have the Dudwala come and deliver milk, and then we had the super dailies, and some people realize it's good, but it's we go back to the same thing. I think it's going to have a natural round of evolution for each household and their willingness to spend and their consumption patterns as well.
Lovely. Yeah, absolutely.
Arjun, do you have 2-3 more minutes? I think we're almost at
Yeah,
5.
we can do our last question and then wrap.
So I had one question because because someone asked about it. So and it's not exactly that question, but as a founder, like let's say I'm raising my post Series A or like post seed, pre-Series A, Series A kind of round. What are, for you as a D2C investor or e-com investor, what are the most critical metric? What is the North Star metric for you look at a stage where metrics start becoming important? And as a founder,
Yeah, I would
should be
say for
actively
me,
tracking.
I look at the unit economics.
Mhm.
Are you making money per order? Do
Okay.
you have strong enough repeats? And what is your return on ad spend? Is that
ROS.
sustainable? You understand that? Is that sustainable? These three metrics for a brand with sales traction.
Right, of course, after a certain revenue.
Yeah.
So do you also have a minimum gross margin limit? You say, hey,
No, because food operates at like 40 to 60%, whereas health and wellness operates at 70 to 85%.
okay.
Personal care will probably operate at 70 to 85%. Fashion operates at 50 to 60%. So it depends on the category.
And do you also look at returns and say if returns are high?
Yeah, it's crucial to look at that. You should net off the returns from the revenue.
Right, of course. Always net revenue. But say if someone's growing really quickly, but the returns are also getting more, do you think
It's
that's a
saying
red
something
flag?
about the quality of the customers, yeah.
Right. Or maybe they're not really happy with the product.
Yeah, quality of customers, happy with the product, targeting some wrong customers.
Awesome. I think this has been super insightful. Any final questions, Sandeep? We have taken all the interesting questions.
No, I think we've had a great session. Arjun, thanks for joining us, even though you've
My
been
pleasure, and we have to do this
traveling.
in person very soon.
Sure, we need to do it in person soon, yeah.
See you.
But
Done,
yeah,
done, done.
thanks for
Thank
taking
you
the time.
guys.
Pushkar, thanks for organizing this.
And all the
Pleasure.
best,
Catch you
Sandeep,
guys soon.
for the 4-0 in the BGT. All the best.
We're both going to see the test matches. Hopefully, it'll not be zero. I don't want that zero column.
Sandeep's watching all 4 tests. I'm watching only 2.
And
So
I'm watching only two.
I hope we win 2.
Done.
Yeah.
See you
Awesome.
guys.
Bye, guys. Take care.
Thank
Thank you.
you.
Bye bye. Thanks,
Thanks
everybody.
for
Bye bye.
joining.
Bye.
Bye.